So if you've been paying attention to the stock market over the summer, you've noticed a few high points, but most recently, some lows as well.
So what do the highs and lows mean for your retirement? 27
First News reporter Nathan Lahota is live in studio to explain. Nate?
Dan and Amy, the numbers on Wall Street have looked pretty wild and, well, sometimes pretty scary over the last few trading days. But what do those numbers really mean to the average American, especially if you don't heavily invest? After 6 years of setting records and flying high, down went the Dow. Following a 531-point drop on Friday, Monday opened with a plunge of more than 1,000 points before a bounce back, then another dip. It's been a bumpy summer since the Dow closed at an all-time peak on May 19th, thanks to factors at home and abroad.
I think the main reason is the Chinese and other emerging economies that have faltered. That in turn has caused a big drop in commodity prices like oil. And there's also anxiety over the Federal Reserve, sending confusing signals about when they'll raise rates.
The volatility will likely continue, which can be scary to those whose retirement may ride on that market roller coaster. That's why Motley Fool analyst Jason Mauser says don't panic and don't touch that 401k.
The nature of that 401k is to take advantage of the good times, to take advantage of the bad times. And over the course of years, that all sort of helps smooth out those returns and helps investors deal with that volatility.
For those compelled to do something in anxious times, Mauser recommends taking stock of what's really in your portfolio or investment fund.
The more you know, the less emotional you'll be in times like these. And so I think that's where the individual investor could maybe take a little bit of an action there to understand a little bit more so that they can sort of keep their emotions in check.
And those stocks, they're a long-term game. Much as they recovered after the 2008 financial crisis, what goes down eventually comes back up. So if you still think the Dow is not doing well, just remember, a little over 2 years ago when the Dow hit 15,000 for the first time in history, and since then has mostly stayed above that mark.